Hello, fellow RoboCapitals. Hope you're well. So I wanted to take some time and go over the history of interest rates, the treasury rates, during Fed rate cutting cycles. The odds are the Fed's going to cut tomorrow. We'll see. But even if they pause, I think we're still in a rate cutting cycle. So we've got a lot of people out in the mainstream media. Jeff Gundlach just came out the other day and was talking about how what we're seeing is unprecedented and therefore proof that the bond vigilantes are back and that interest rates along the curve are going to go up due to debt and deficits. And we're going to move into this era where growth and inflation expectations really don't drive yields. Again, it's more about debt and deficit expectations because we're at 6%, let's say, deficit to GDP. And if we go into a recession, that's only going to increase. And the bond market is sniffing this out. The bond market's starting to sniff this out, that the most likely path is deficits continue to explode and the debt continues to explode. And the proof he's showing is the fact that the Fed is dropping rates. We're in a rate cutting cycle, and the long end of the curve hasn't come down or hasn't come down as much. And therefore he's saying, look, this is the bond market telling you that it's starting to reject treasuries, it's starting to reject the deficits, the debt, and it's starting to price in, let's say, the debt and the deficits growing into the future. In other words, that debt and deficits will matter to yields more than growth and inflation expectations. So I didn't want to do a video just debunking Gundlach, but I thought it would be a neat way to go back and look at history and to forget the narrative, forget Gundlach, forget what the talking heads are saying in the mainstream media, the social media, but actually go back and look at the data, look at the charts, and see what has happened in the past. And then we can determine if today is unprecedented. And then we can also hopefully determine, based on what has happened in the past, if we can see some consistencies, some actionable ideas that we can actually turn into trades and make some money here. That's what it's all about at the end of the day, protecting your wealth, growing your wealth. So this isn't going to be personal investing advice, but it's just me doing some research with you and just thinking through this and talking through it out loud. And at the end of the video, if I have some conclusions, then I'm going to plug that in to our Market Wizards or the Rebel Capitals GPT, and we're going to see if it spits out some good trade ideas. So I think there's going to be a lot of fun, as well as being educational. And we're going to start by looking at Fed funds. And we're going to start with